Hey everyone, it's Dale here. In this video I want to show you one pretty interesting trade which I took earlier today. It wasn't the best trade of the week, that's for sure, but it's very interesting as far as stop loss placement goes, as far as take profit goes. Let me show you, there are a couple of things which I think you can learn from here, or at least a couple of things which could inspire you. So what you're looking at is a 30-minute chart of US dollar Japanese yen. And the level that I was trading, it was a short, this red line, and it was short from 155.04. First, let me talk about the reasoning behind this trade, okay? Why I entered this short. So, if you take a look at this strong downtrend area, then I used my volume profile here and identified a significant volume cluster, this one, within this downtrend. Because volume clusters within a downtrend like this represent strong resistance, right? They represent place where sellers were active as they were pushing the price downwards. The price is supposed to react to those volume clusters, like for example to this one. There was that reaction, and this is how it is supposed to look like, right? So I was expecting the same thing to happen with the second volume cluster, with this one. I had the level at the beginning of that heavy volume zone. Not only it was the beginning of a heavy volume zone, it was also beginning of a fair value gap, right here. That's from Smart Money Concepts. And I expected the price to bounce from it. So that's the logic behind this, okay? As you can see, the price hit the level in here, overshot the level quite a bit. We'll get back to that later, why it overshot the level. And then finally made some reaction where I was able to make some money. Let me show you how I placed my stop loss, because I think that this is quite interesting part. If you take a look here into this area, then my number one rule is I want to place my stop loss always behind a heavy volume zone, right? So I was looking into this heavy volume zone and I wanted to place the stop behind it. So that's why I placed the stop in here. This was the stop loss line. As you can see right here, the price just missed that stop loss. I don't think that it was pure luck. The way I was thinking about that stop loss placement was like, if you take a look here in this area, then there were those two highs very close to each other at the same price almost, and that's failed auction. And price sometimes like test above it, at least one pip above it. So when I was setting this stop loss right here, I thought like, okay, there is a risk that they'll want to test above it, and I need to be okay with that, and my stop needs to be behind that place. And in this case, it was also not only behind that failed auction here, but also behind this heavy volume zone. So that's how I was thinking about this, right? That's why the stop wasn't, for example, here, because first it would be in heavy volume zone, that would suck, and also it would be at a failed auction here, that would suck as well, because price likes to test that. As you can see, the price really tested that, but then still reacted to the heavy volume zone, and finally there was some sell-off. So yeah, stop loss was missed and the price went towards the take profit. Now, I was thinking, how do I place the take profit in here? The thing was that there was quite a strong barrier standing in the way. Let me show you. As the price was pushing towards my short level in here, this heavy volume zone formed here. And I was afraid that the price would react to it. So my process of thinking was that I better quit my trade before the price reacts to this heavy volume cluster. So that's why I quit the trade in here. This was my take profit. As you can see, this trade was not ideal because I was trading with negative risk-reward ratio, right? This is what I was risking, and this is what I was getting. Not ideal. But in case like this, when a strong support is standing in the way, I mean very, very strong support, and this one was a strong support, then the best way how to go about this, if you are already in a trade, because I entered this trade in night when I was asleep with a limit order, the best way to do this is just quit the trade before it reaches that support, which could potentially turn the price up again. So even this will put you into the negative risk-reward ratio, it's better to bank your profit and get out of that trade rather than see your trade turn before your take profit and you end up with a loser. So this is how I approach this. As you can see, after reaching the take profit, there was just a small reaction and then the price shot past this heavy volume zone, and only then there was that big reaction, and I was afraid of this, right? Only it happened a little bit later. I don't know why, maybe the market just went for some liquidity sitting here below this low. Anyways, the safest approach to quit the trade was in here, even though it was with a negative risk-reward ratio. I'm not a huge fan of the negative risk-reward ratio, but in a case like this, it is the safer option. And if it's like this, then I just go for the negative risk-reward ratio and I'm done with the trade. So yeah, that's why I will say that this wasn't the best trade of the week, but I think it was definitely interesting because of the stop loss placement, because of the negative risk-reward ratio, because of the early take profit. So I hope you guys found it interesting. If you guys want to learn more about volume profile trading and get your hands on my custom-made indicators, then you want to go to my website. It is at traderdale.com, and if you click this button, Trading Course and Tools, then it will bring you to this page where you can browse my trading education and custom-made tools. So thanks for watching the video. I'll be looking forward to seeing you next time, and until then, happy trading!